Hey guys, and welcome to the recap of the first trading week of 2024. We've been very active on Discord beginning on the 2nd of January. I've started sharing my outlook for 2024 just before the market opened up for the new year in 2024. And now we're going to start to recap all the trades we took with the VIP members and also on our free live streams that I do on Tuesdays and Thursdays here on YouTube. Let's get started right away. We started into the new year with our analysis on the daily time frame here. This is a Discord screenshot with the date on the 2nd of January, right at midnight. And I've mainly focused on the daily time frame here to look for inefficiencies. And the most obvious inefficiency is usually what I go for to target. And this really stood out to me. If we look at the daily time frame here, this is our most recent 20-day IBDA range. Within that range, we have one main inefficiency to focus on. Of course, we have more bullish fair value gaps down here, but that's also where we have a lag in volume if we draw the anchored volume profile from the IBDA 20 low all the way to the IBDA 20 high. And going forward, I wanted to see if we can continue below this daily sell side to fill in this inefficiency. And we also looked at that on the hourly time frame, because on the hourly time frame, we saw SMT divergence here with NQ right here at the peak. We took out our previously high of the year 2023 during this trading week between Christmas and New Year's Eve. So we slowly but surely walked our way here to the upside, left behind SMT divergence, distributed above this high, just going sideways, and then we started to break down, shifting structure on the lower time frame, on the 1 hour time frame to be specific. And like always, mention it here too, going with the flow, I see a potential low resistance liquidity run through orders sell side, because those traders are very likely trapped long, hoping that in the new year, market is going to continue to go higher and they bought at a discount. But every time I see price slowly stair-stepping its way to the upside, very likely we're going to see all these traders being liquidated very quickly, because that's how market makers make the most amount of money. So starting out on Tuesday, the first trading day of 2024, with the London session tape read with our VIP members, I've been looking for a potential short setup, like said, in our 1 hour time frame bearish fair value gap, since we already shifted structure and confirmed that shift with a candle closing below it. We opened up, and I always get to the charts at around 2:45 a.m., 15 minutes before the London Open, and I already saw price has moved inside of this bearish fair value gap. So I mainly looked, like I mentioned right here, price being supported on bullish discounts, being left behind. If we see a change in that delivery while being inside the 1 hour bearish fair value gap, I will engage. Still holding, continuing with the trend at 9:38, and at 10:06, we finally started to see that shift. So if we drop down now to the 5-minute time frame and look at the price action that we saw here on Tuesday, that first trading day, that's exactly what we've got. So Asia consolidated, and first of all, we open up with a nice new year, new week, and new day opening gap here. We go sideways, and then towards the beginning of the London kill zone, we started to trend up, and we pushed up, starting at 2 a.m., 1 hour before the London Open, right here at 3 a.m. one time, and note how we hold support on all the inefficiencies we leave behind. We have a volume imbalance right here. We come back to retest it, and we use that volume imbalance to deliver higher a second time. So that's the first push, the second push, and what do we leave behind within that second price leg? Another bullish fair value gap. And that was right at the time where I mentioned that price is still being supported by bullish fair value gaps. We're waiting for that to change. And as price continued up higher, it kept on inside of this 1 hour bearish fair value gap here, this gray box. It kept on leaving behind bullish discounts. So that was my main focus here, focusing on these bullish discounts, waiting for them to be invalidated. And right here at 3:45 with the new 15-minute candle, we open up with a bearish volume imbalance, and we close below our first bullish fair value gap up here, but still holding that second bullish fair value gap. So at this point in time, I gave it a little bit more room to breathe. And what did we do? We started to retrace and test our newly formed inversion fair value gap now. Let me draw it up. This is our inversion fair value gap, right at the high of our 1 hour bearish fair value gap. We already delivered 3 pushes, so the majority of retail traders is very likely trapped long. So now I really wanted to see if price is respecting bearish inefficiencies now, because this is really our first bearish inefficiency within this entire 1, 2, 3 push move to the upside. So bearish fair value gap, and what did price do? It retested that bearish fair value gap, perfectly respecting our highest inversion fair value gap here, and at 4 a.m. perfectly timed with the new hour open, so 3 a.m. this was an entire hourly candle. The new hourly candle opened up. Before it opened up, we retested our bearish fair value gap, and here on the close of that 4 a.m. 5-minute candle, I jumped in on the short, because now we had the confirmation. We stopped respecting bullish discounts, even this volume imbalance right here. We closed below that. We closed below our highest bullish fair value gap. So at this point in time, I was really confident that we are going to attack short-term lows. Our short-term low here of our second to third move to the upside, and right here between 1 and 2. We hit that, and my main target was right here at the Asia session low, and we got the confirmation right in here, and that's also what I shared with all the members inside our tape reading chat. If I can find it somewhere, right here. Once that hourly candle closed, jumped in the trade, and yeah, ended up making some nice profit. And if we zoom out, we can really see how nicely we delivered off this 1 hour bearish fair value gap, even through our new week opening gap. We stalled for some time inside of that until we finally left that area, hitting that previous day's low, really giving me the confirmation that we are going to see that low resistance liquidity run on the daily time frame and hourly time frame, all the way into our daily sell side inefficiency. And then, of course, we came back for the New York session live stream on our Discord, but we already mentioned it at the beginning of the stream. The opportunity is, of course, always there for a potential retracement, but 8 out of 10 times when we have a very big London session range from the high all the way down to the low, that's 50 points. If we see that, the probability of a early AM session, seek and destroy trading day is very likely. It's just too high for us to even bother coming back for the early AM session. But anyway, because it was the first trading day of 2024, we came back for the PM session, and I think I ended up taking a 1 minute time frame long right in here at 10 a.m. But unfortunately it didn't play out, and it hit my stop loss. And that was that entire AM session. We just ended up doing some sort of, doing seek and destroy. We took out, let me grab the path tool here. We formed a low, formed a high, we take out the low, we take out the high, we take out the low again, almost make it look like we're gonna continue and reverse now after taking out the low of the day, just after the New York Open, but we failed. And after we failed, we slowly started to recoup and made it all the way back to our sell side liquidity pool right here that we mentioned on the hourly time frame. And as a little note to myself, really next time when we see these big London session moves over 30 to 50 points, then it's really not worth it coming back for the AM session, because the risk of just getting chopped around, looking like it's gonna go long, and then short again, is just too high. And I don't like that seek and destroy environment. My setups don't really work well during seek and destroy. I think most don't. So I guess it was just a little bit of excitement, new trading year, first trading day of 2024, that led me to actually trade within this job. Towards the end of our AM session live stream, I also mentioned that we're very likely gonna see a better setup than we did during the AM session within the PM session. So I decided to come back and see if I can spot a potential trade idea for the community members. And that's exactly what we got right here at 12:15 with the market structure shift at the beginning of the PM session right here. So we formed our higher high, higher low, higher high. We shifted structure, forming our first lower low. So right here we had that market structure shift, that change in the state of delivery, perfectly rejecting from our old 1 hour low right here, or daily low if we want to call it that. So right here we had that market structure shift to the downside, market structure shift bearish. And once I had that confirmation right here, I alerted all VIP members to look for a potential 2022 setup right here, potential 2022 model. I marked out the bearish fair value gap, the breakup block, and the inversion fair value gap. I already entered with a limit order on the inversion fair value gap, and I added to the position once we retraced further into our breakup block right here. And just as forecasted, not that I know everything what's about to happen, I'm still wrong plenty of times, but I make sure that my losing trades are much smaller than my average winning trade, and that's how you survive in this game. I tried it during the AM session after a very successful London session. Didn't work out well, came back for the PM session, saw my go-to 2022 setup and decided to take the short, and we eventually hit our low of the day. So Tuesday was done, our first trading day of the year 2024, and we already confirmed my idea that we are going to, in a very efficient, quick delivery, going to attack more and more sell side of the slow staircase movement to the upside right here. Confirmed that once we reacted off our 1 hour bearish fair value gap, like I mentioned in the weekly outlook, continued lower, consolidated at some sort of seek and destroy, but we made back our losses with the 2022 model at the PM session. Wednesday morning, I woke up a little bit later than usual, so 43 minutes after the London Open, 9:43 my local time. And I was very worried that I already missed a bit, but once I got to the chart, I looked at the ES, and I immediately shared my first thought seeing the ES chart. And let's actually look at that in detail. Let's get rid of that. We saw, once again, we had first of all that PM session recovery here after our 2022 model, and we left behind big inefficiencies. And I basically wanted to see those being filled in. So all I saw was this, big inefficiencies, consolidation, rejection of our new day opening gap right here and our old breakup block. So I was curious, and the first thought that popped into my mind once I opened up the charts was, okay, we have this unfilled volume imbalance right here. We kept holding support on that once, twice, 3, 4 times, almost a 5th time right here. I wanted to see if we cannot close below that area and then potentially use it as a short. And to confirm that was my first thought. I saw we closed below it. We had the midnight level here to resist price, and also this volume imbalance that kept on holding support for 4 or 5 times. So heading into this, I simply placed a short limit order. We had a nice bearish fair value gap here overlapping with our volume imbalance. Old support being flipped into resistance. We already cleared the Asia session high, rejected off our highest bearish fair value gap here. We did not end up sweeping this high, but apparently we didn't need to. So with the new hourly candle here at 3:50, 3:55, 4 a.m., very similar to what we saw on Tuesday, we retested our bearish fair value gap right here. Let me actually make it red. Retested our old area of support to the tick, and this is this laser sharp precision that I'm looking forward to see on ES, and that's also the reason why I'm only trading ES for the continuation lower. I think I got out with my first position right here and closed another part of it after I saw that market structure shift, but eventually this just happened to be a fake out, and I went off plan. I didn't share that next setup because I don't intend to trade after 5 a.m. New York local time. So after that London session kill zone timing window is over. But I saw the opportunity because we had this market structure shift here. We formed our higher high and we left behind this bullish value gap. But we also at the same time left behind these perfect equal lows here. And we still didn't clear that previous day's low, and my higher time frame bias was still heavily bearish. So I wanted to see if we cannot flip this bullish share value gap into a inversion fair value gap. So initially a bullish fair value gap after market structure shift. We retrace into it, and initially right here at 605, also a new hourly candle, we're holding support. Still no confirmation for me to enter long here in the middle of nowhere without having taken any significant higher time frame liquidity pool, like for example that previous day's low. I would have wanted to see at least that next higher high to be formed. So basically a bounce of this bullish fair value gap and then getting in on that next move to the upside. But very likely I wouldn't have done that either. So I wanted to see if we're going to hold support here, or if we're not, if we can close below, and then like always use it as resistance. And I saw that was already a good confirmation. And then we rejected heavily. Open up with a bearish volume imbalance here with those perfect equal lows. So I tried my luck because my higher time frame bias is already bearish. If I cannot get in on this short using this volume imbalance as an entry, that's exactly how it played out. We left behind another bearish fair value gap. We retested it and eventually continued lower into my target of that previous day's low. But instead of actually sweeping it immediately, we just tap it. Then we saw the exact same setup just before that New York Open. So once again, we have left behind equal lows. We shifted structure right here. And we did leave behind a bullish fair value gap. So I thought, why not try the same thing again? We didn't take out officially this previous day's low. So let's see if we're going to hold support. If we're going to hold support, I'm going to engage once we form that next higher high to really confirm market structure on that next price leg. First push, second push, and third push. Taking advantage of that. But right here at 8:55, also note the timing here. Just before we get that new 9 a.m. candle, we failed to hold this bullish fair value gap. Got very, very close to our equal low sell side. And how did we open up? With a volume imbalance. And I use that volume imbalance once again as an entry, holding my trade all the way into sell side liquidity on the hourly time frame right here. Let me actually map it out. So my target was the sell side liquidity. I didn't check the news schedule either. I was doing that on live stream right here on Wednesday for free on YouTube. Already being in that trade. Target the sell side liquidity. I even kept on holding through the news event. And even look how this inversion fair value gap that I referenced earlier, where we found that higher high, higher low, higher high, market structure shift. We didn't retest it after closing below it up until that 10 a.m. news release, where we had this pump to the upside, rejected off the inversion fair value gap, and continued accelerated lower into our drawn liquidity. And that's also the reason why I didn't take this bearish fair value gap during the New York live stream. I think at least I didn't. I wanted to see if it continues lower into that next 1 hour time frame target. This low, this is also that daily sell side target that we spoke about at the beginning of this video. Now that we're done with Wednesday's price action, let's continue with Thursday, London Kill Zone. I also, like always, ended up tape reading with our VIP members in the tape reading channel. And yeah, Thursday was a little bit more difficult than usually because price during the entire London Kill Zone, my timing window from 3 until 5 a.m. didn't really go anywhere. So initially it took out buy side right here, and then we rejected, leaving behind perfect equal lows. We pumped one more time to the upside. I initially wanted to see if this bearish value gap right here can hold resistance, because we already swept buy side right here, to continue lower into the sell side and this sell side liquidity pool. Unfortunately it didn't, and I have been stopped out right here with this last push here to the upside. Also note the time, 3:35. Most of the time there's something happening right in the middle of the hourly candle, so keep an eye out for that. And I think then I looked for the short of the inversion fair value gap, but we didn't get the retracement. We saw the sell-off, and because I had that higher time frame short bias, I kept on looking for the continuation lower because we still didn't hit proper sell side targets right through here, entered short right here at the VWAP. But once we saw that very strong close back above our bearish share value gap right here, let me actually make it bearish, I immediately closed the trade instead of waiting for my full stop loss to be hit somewhere around this area. And then eventually we started to hold support here, so I also started to think, okay, this might have been a sell-off below sell-side liquidity and short-term lows. We're gonna bounce off the new day opening gap right here and recover quickly, taking out that buy side. But unfortunately also this didn't play out, and I closed the trade once I saw the confirmation close below our inversion fair value gap, which kept holding support here, and this bullish fair value gap. And then, but instead of actually using it as resistance to continue lower, we once again push again to the upside, taking out the short-term high. Once we took that out, we immediately reverse, taking out the short-term low, push all the way back to buy side again, but we didn't sweep it, we only left behind equal highs, and then eventually we hit those targets. So at this point in time, if I would have been still around at the charts, I very likely would have lost some more, trying to take a long or short into buy or sell side within the seek and destroy, but eventually I would have gotten it right with the short of this bearish share value gap. We closed below our new day opening gap, we retested. We didn't take orders sell side right here yet, for example this one, or actually we did. Well, it's outside of the timing window anyway, but this would have been the only time where we actually started to respect bearish inefficiencies that are left behind once we closed below that new day opening gap. But at this point in time we already cleared sell side right here and our low of the day right here. So looking for that continuation after orders chop, very likely wouldn't have taken that trade. And after some more chop where we bounce back almost into buy side, we started the New York live stream, and because I arrived a little bit late at 9:44 a.m. I made sure, because I checked the charts on my phone and already entered a long position, that just checking from my phone, it looks like a 2022 model right now, talking about ES of course, because it's the only chart that I trade, plenty of buy side liquidity being left behind. That's all I was able to share because I was driving my car at this point in time. So right here, the buy side liquidity I was talking about was right here. This perfect set of relative equal highs being left behind. We didn't clear right here at 7:35. We swept our higher time frame point of interest. And like I said, all the buy side being left behind looks like a good 2022 model to me. Because right here, we formed our lower low, lower high, another lower low, and another lower high. And then one last time, we push to the downside, sweeping that previous day's low sell side liquidity pool. And what happens after that? 9:25, 9:30, we get a immediate reversal to the upside. Immediate. We didn't continue lower. We didn't respect our bearish fair value gap. We actually turned it now into a inversion fair value gap. You might have heard that very popular dodgy DD on Twitter, inversion fair value gap strategy. So based on that close, I already entered a feeler long position, not my full position size, but 25% of it. It immediately retraced into the inversion fair value gap and continued higher, but we've been getting rejected here at the VWAP. So just around 9:50 to 9:55 a.m. I started the live stream, and then a little bit later I made sure that I also ping all the VIP members while we were still playing inside this breaker block. You can watch the entire recording on YouTube because I've streamed for free on that specific day, on Thursday the 4th of January. You can find the links in the description box below, or just look on my channel if you go over to the live stream section for the live stream on the 4th of January. Because just when we started streaming, we've been talking about this breaker block and this bullish fair value gap overlapping nicely with our inversion fair value gap here. And after coming back to retest it one last time, we had our stop loss just below this wick. We eventually still ended up consolidating, but at 10 a.m. with once again that new hourly opening, we eventually decided to push into all this buy side liquidity that was left behind, hitting all our take profit targets, and I was out of the trade at this point in time, recovering all the drawdown I made during London with the losing trades even within our tape reading session. So I'm not claiming to win every trade here. It just happens to be that sometimes, especially during that seek and destroy environment, we end up taking losing trades. But because we have a very dynamic risk management approach, our losing trades are much, much, much smaller than our average winning trade. Like for example right here, from that lowest entry that I took off this bullish share value gap, that was a total of almost 15 points into my final buy side liquidity target. During the last hour, so from 10 a.m. until 11 a.m. of our first day live stream, we were looking for an opportunity to continue the long, but unfortunately we didn't see a retracement into a nice discount or fair value gap. I think we've been playing with the thought of using this as a higher time frame breaker block. Eventually, price continued to move to the upside one last time, leaving behind this discount. Just for a practice, we took a paper trade right here, and I immediately explained that if we see the close, if this bullish share value gap here, that highest bullish share value gap, fails to hold support, we can very likely go into a short target, short-term low sell side liquidity. So all these lows here with a higher low to the left and a higher low to the right, higher low to the left, higher low to the right, higher low to the left, higher low to the right, higher low to the left and higher low to the right as potential targets for a quick scalp. Because once we see that invalidation of that highest bullish share value gap, also a relatively big bullish share value gap here at 11:10 a.m., we don't have to keep on holding. So at this point in time, we could have still entered, let's say, for example, at that 50% level with our stop loss, maybe just below this Wix low. Even a stop loss here would have been fine, but, well, I don't like having my stops too close to the low of a bullish share value gap if I want to simply jump on the continuation trade. I normally don't do that at the high of the day, but yeah, for practicing on a paper account, it sometimes doesn't hurt to remind yourself why you shouldn't be taking these trades on your live funded accounts, for example. So we decided to take on this trade. I think I usually go for that 5-point stop loss. Then we switched over to some other charts. I think it was oil on that specific live stream, but we mentioned that if we see the close below this bullish share value gap, a short could be very likely. And I also mentioned the targets. So if you would have entered just after we closed below that bullish fair value gap, turning it into a inversion fair value gap, targeting short-term sell side, would have netted easy 5 points into the slowest target, potentially also targeting that new day opening gap paired with this bullish fair value gap right here for even a higher reward. I wasn't out to target this entire continuation because it was already past a successful New York AM session. No reason for me to come back for the PM session with that continuation sell-off. But we still see that we didn't take out this low. We formed a higher high, higher low, higher high. Then we swept this low, leaving behind more equal lows right here. What do we leave behind? A bearish fair value gap right here, paired with our previous day's low sell side liquidity pool. So even if I would have traded the PM session, simply taking a short based on that, targeting those equal lows, that would have been a free, almost 4-point move. My low hanging fruit targets are always 5 points, stop loss above this high, and once I would have seen a close back above this bearish share value gap right here, I would have simply closed the position, or at least close half of the position, a quarter of the position, to take off some risk. Because once I see that invalidation of my entry fair value gap on ES, I specifically mention here on ES, I don't want to be involved in this trade, or at least with the amount of risk that I initially entered with at all. And then it's already NFP Friday, always the first Friday of the new week of the new month. I only decided to paper trade because I don't really want to risk too much on a already very successful trading week. The first trading week of 2024, I didn't feel the need to continue to risk live capital on that trading day. So I decided to only paper trade and tape read during the London session. And we see the trades didn't really play out. So initially, we looked at the setup right here. We saw the London Open here at 3 a.m. We just took this low. We moved to the upside. And I think I decided to go in for a long because we had this nice balanced price range, a bearish share value gap that was overlapping perfectly with this bullish share value gap right here. So inversion fair value gap overlapping with a bullish share value gap for the continuation higher, forming some sort of a double bottom pattern here at the low of the day after having cleared that previous day's low. Initially, it respected the bullish fair value gap overlapping with this inversion fair value gap right here. Let me actually draw it up. So here's that inversion fair value gap, and here we have that bullish share value gap. So we see how perfectly they overlap. Initially, it kept holding support, but unfortunately right here we failed, and that's exactly when I knew to close my long position, because ES is delivering very, very efficiently and very, very precisely. That's why I trade ES and not NQ most of the times. We did sweep this high, so I was aware of the risk that we might not continue higher, that we are just going to reject from here. But it was worth the risk for me, just for the sake of the tape read. I'm paper trading anyway, so I'm allowed to take riskier trades than I normally would take on my live funded account. And we also see that once we get that confirmation close below our balanced price range, so this bullish share value gap, overlapping perfectly with this bearish share value gap, rejecting right here from our previous day's low on this bearish share value gap, we swept buy side. We could have used this old bullish share value gap or balanced price range with the inversion. Once we close below it, we come back to retest it. And what do we do from here? We deliver lower. So this would have been that confirmation candle that we are going to take out the sell side. So entering short after that on the inefficiency being left behind right here for a quick scalp of 5 points would have been, very simple for that continuation into sell side. Then we bounce back, made it look like it's going to reverse. I think I entered, that's the screenshot that I've shown you. It's not there anymore right now. Going long on that inversion fair value gap, also overlapping with this bullish fair value gap here. But unfortunately, it failed, and we, after filling in this bearish fair value gap here and sweeping the short-term high with a lower high to the left and a lower high to the right, decided to continue lower. And that's already the end for Friday's London kill zone tape reading session. I wasn't around for the 8:30 NFP news candle, but I already covered that during Friday's live stream. That also can be found. All these live streams can be found on YouTube, on my YouTube channel, so make sure to check them out. So then we headed into the NFP news event right here. After selling off during the entire day, we left all these lower highs behind on the 5-minute time frame and also on higher time frames. The Asia session high ended up being that high of the day. I wasn't around for the 8:30 news event because I already made that decision that I'm not going to be trading during the NFP news event or even after the NFP news event, at least on my funded accounts. But if I would have seen that, guys, right here, we eventually hit. If we go back to the hourly time frame, at this point in time, we already hit our daily sell-side liquidity pool that we mentioned at the beginning of this entire video. We filled in this daily inefficiency. Where are we at? Let me zoom out or zoom back in. Get rid of this drawing and all the other ones. Right here, we already delivered into our IPTA 20 range, and we already filled in, if I turn on my daily analysis, this inefficiency on the volume profile. We are at the low of the week, so this really presented the perfect, thank God it's Friday model setup. We are at the low of the week. Now I actually have to hide the daily analysis again. But this is this daily inefficiency that we talked about, and look how perfectly we filled that in. So after filling it in and immediately turning around, showing strength bullish momentum to the upside. That would have been a point in time if I would have been in front of the charts to, thank God it's Friday, retracement into our existing weekly range. We shifted market structure just after the NFP news event. And what did we start after that? Respecting bullish share value gaps. We started our NFP live stream, paper tape reading live stream, right here at 9:30 a.m. And we actually decided to take this bullish share value gap that has some support of the new day opening gap and the midnight level for a continuation trade, even holding through the news event back into some old buy-side liquidity pool. But yeah, very interesting NFP news event, of course. Just because this NFP news event delivered very nicely doesn't mean the next one has to. I think, you you're either just going to paper trade and use it as an experience, or, well, adjust your risk if you decide to trade after the NFP news event. Sometimes we just can end up consolidating within a very large range. We don't always see that perfect delivery. I mean, here we had that bearish share value gap. We immediately close above it. Once we close above, we use it as support, inversion fair value gap, continuing to deliver into buy-side liquidity, leaving behind a discount, filling that in, bouncing off the consequent encouragement, continuing to push. New York opens up, leaving behind a new discount. We used that as an entry to continue the long. If we would have seen the close below that bullish fair value gap, I would have immediately taken off some risk or exited that entire position I've talked about, that entire thought process on that live stream. So like I said, make sure to check that out if you want to watch that in real time. And then with that news candle at 10 a.m., we continue to pump into orders buy-side liquidity. And towards the end of the live stream, I also, for the paper trading experience, to remind myself why I don't take these big fair value gaps as an entry opportunity, especially after hitting my first win on an NFP Friday. Anyway, we try to take a long of this bullish fair value gap. With the same explanation, if we see the close below that, we immediately exit our position. But like I said in that stream, this fair value gap has a range of more than 10 points. And that makes risk management very hard unless you really scale down to maybe 1 or 2 micros on your funded account. So I wouldn't have taken that risk at all on any of my funded accounts. It's just too much for very little reward. We had that previous day's high sitting here, and we were looking for this to be the draw on liquidity, using this bullish discount paired with the new day opening gap as support to deliver into it. I mean, we did deliver into a new high, so we saw that we left behind equal highs, and we just wicked this high, but then immediately turned around with this 11:15 new 15-minute candle opening, hunting short-term sell side. So eventually, I mean, we could have taken some partials, and this would have still netted 8.5 points almost, moving our stop loss to break even and then being stopped out. But still, it's not worth the risk to cover this entire bullish share value gap here, or even give it some room to breathe and put our stop loss just below the slow. This is a negative risk to reward ratio, and that's, I like to take those trades on a paper trading account just to remind myself that it's not worth the risk to take these setups on my funded accounts. Eventually, then we rejected, continued lower, started to chop around a little, formed a lower low, lower high, lower low, retraced. Here we actually saw a kind of decent 2022 model, but it's the end of the week. I'm not even interested in that price action during the PM session anymore. We already saw the thank God it's Friday setup. So if we look at the weekly candle, the stuff that we see right here, this entire retracement back inside of our weekly range, is making up this wick on the weekly time frame. And we also see that we just hit a weekly bullish share value gap, but we're gonna talk more about that in the weekly outlook that I'm gonna share in a couple of hours with all the VIP members. So, and that's that. It's a 40-minute long video. Let's see how many people actually watch it till the end. I think there's lots of value being included, going over my entire thought process of what I did before each trade and what confluence I used to enter into a position. I shared my wins and my losses. I think that's really important. If I would have only shared my wins, this really wouldn't be valuable. And you can also see that similarity between my losing trades. They all happen to end up during a seek and destroy environment. For example, Tuesday New York AM session and Thursday London kill zone, where we just went sideways and the market really didn't move. So now we're at the end of the video. I hope you really enjoyed watching it, and if you have learned something new or you have found some value in the content here, then please give this video a like and also let me know in the comments, because this way I can know that that's the type of content my followers or subscribers want to see. Actually, my entire weekly recap. While recording this, I really enjoyed recording this, so if you enjoyed watching it, really make sure to let me know, because then I'm going to do these every week for the entire year of 2024, recapping all my trades and my entire thought process for the entire week. Alright guys, take care, enjoy the rest of your Sunday. I will be back on Tuesday again for free on YouTube, and of course on Monday and the rest of the week with our Discord members.